So, hello everybody. Welcome back to GAIC 2021 Global Alternative Investment Conference here. So we have important guests and panelists over here. And speaking of today's agenda, after COVID-19 crisis, new investment opportunities are opening up. As you all know, a South Korean e-commerce platform, Coupang IPO on New York Stock Exchange in March was able to raise $4.5 billion. It's the largest IPO in the United States by a firm based out in Asia after Alibaba's 2014 here. With all alternative investment, our global LPs, such as pension fund, mutual aid association, increase here. According to the BCC, the amount of venture investment the first quarter of this year is more than $2 billion. And an increase of 1.5 times. So it's good to see all the attention coming onto South Korea after Coupang's IPO. So let me please introduce Rupert the Hoogewerf. He's a chairman of the Hurun Group. So Rupert is a British, but he spent more than 20 years in China. He founded himself a Huron Group, which is China, an Asian version of Forbes magazine here. Rupert, welcome to our show. And then please initiate your presentation right now. Thank you.
Well, look, thank you very much indeed, Winston, for that kind introduction. Ladies and gentlemen, it's really nice to be with you all this morning. I'm based in Shanghai today. And today I'd like to talk to you a little bit about the unicorns in the world. We put together an annual report where we ask the investors around the world to sort of give us the names of all the unicorns in the world and in their portfolio, and then we collate it and put it together. And we've been doing this now for a number of years. In fact, I started Huron Report probably about 20 years ago, back in 1999. First doing things like the China Rich List, and then now specifically we're talking about unicorns. One of the things that really strikes me about the unicorns is that although everybody thinks of the US as the home of all the unicorns, especially with Silicon Valley being so dominant. And there are now more unicorns in Asia than there are in anywhere in the rest of the world. So Asian unicorns lead the world. And I thought that's sort of what I was going to talk about today, because a lot of the investors, I realized, are from Asia, targeting Asia in the first place. And could you change the slide, please? So first things first, I thought what I'd do is talk a bit about, how many unicorns are there in the world officially? Well, we found 586 in the world. And this is last year's statistics. And just because this is a closed-door meeting in a way, I can probably give you a little heads up because we're just collating the current 2021 list as well. And we probably found an extra 300 new unicorns in the last year. And that's huge. That's the largest number of new unicorns that we've ever found in the world. I mean, there are only 586 last year. We found an extra 300 this year so far. And we expect that number to continue to grow. And again, so 586, half, as I said, are in Asia. Next slide, please. And looking back at last year, this time last year, the largest unicorns in the world were Ant Financial, ByteDance, and Didi. They're all Asian companies based out of China. And then number 4, again, is from China, it's Lufax. Now, since then, we've seen Ant Group has tried to IPO and failed. ByteDance has now become the largest unicorn in the world officially. It's probably got a valuation somewhere between, it's hard to say, but somewhere between sort of 200 billion to 400 billion, especially on the back of on the back of Kuaishou's IPO. Lufax has actually gone IPO already. And then we've seen sort of massive changes in the valuations of companies like SpaceX in the US. Sort of this time last year, it's probably only half the valuation it is today, because since then they've actually sent sort of people into space. And then the likes of Airbnb has gone IPO as well. But it just sort of gives you a flavor as to the impact of Asia's unicorns. So ByteDance being now the #1 in the world, and even though this time last year it was #2 and Ant was #1. One thing that I suppose is interesting is that if you look at just the top 10, and of those, they either come from China or the US. So they're the only two that really countries that strike you there. Next slide, please. And then this is probably a slide that really, sort of people find curious. It's that of the 600 odd unicorns that we found, 80% come from either the US or China. Wow, that's absolutely massive. So I mean, look, the US and China are about the same, 230 each. US is very slightly ahead. But 80%, but US and China between them have only got 25% of the world's population. US and China between them have only got, roughly speaking, 40% of the world's GDP. And yet, in terms of the most exciting, dynamic companies that investors are looking for in the world, it's 80%. So it's really heavily dominated here. Surprisingly, the US slightly comes ahead of India. But one thing that strikes me about India is that although we found 21 Indian unicorns, there are another 40 Indian unicorns predominantly based in the US. So they count as US companies or US unicorns, but they're actually founded by Indian co-founders. And then South Korea, this time last year, did extremely well. We found 11, making it the number 5 center of unicorns in the world. Actually, that's really, really strong. Ahead of Germany, ahead of Israel, ahead of countries with a lot bigger populations. But so the entrepreneurship going on in South Korea was huge. Next slide, please. Then we break into the cities. And this is something that I'm doing a lot of research into at the moment. It's the startup ecosystem. This is sort of like the key word that I'm trying to sort of promote. And I'm looking at, where are the investors based? Where are the top raw talent, as in the top universities? Where are the, sort of the mentors, if you like, the successful entrepreneurs? And in this case, Beijing is head and shoulders above the rest in the world. So Beijing, you would have thought again it's San Francisco, but it's not. It's Beijing number 1, San Francisco number 2. But if you look at the numbers in specific, this time last year, and it was just under 100 at 93 unicorns headquartered in Beijing. And that's critical because that's actually going to drive an awful lot of new, fresh unicorns because they've got their mentors around. And so, Beijing has got a lot of investors sitting there. It's got a huge amount of raw talent because it's got so many top universities. And then you've got so many successful entrepreneurs living there as well. Sort of ditto, same sort of thing with San Francisco, you might argue. And then Shanghai is ahead of New York. And then Shenzhen, Hangzhou are both ahead of London and Palo Alto. So just sort of gives you a flavor as well. Next slide, please. We did a little bit more analysis here as to which sectors these unicorns are from. And one thing that you might be interested in is that when we broke down the sectors as to which sectors are being, the sectors number 1 were e-commerce, AI, and fintech. They're the big 3. But when you look at the sectors that have been disrupted, it's actually financial services, healthcare, retail. They're the big 3 as well. So in terms of the disrupted sectors, it's financial services, healthcare, and retail. But in fact, what they're actually doing, these unicorns, would be more the e-commerce, AI, and fintech. And just again, to give you some flavor. Next slide, please. We did some analysis on the average age of these unicorns. And so they're only 9 years old, so very young. And then 33 of them, can you believe it, are less than 3 years old. And the youngest was only 1 year old. I mean, but that was a spin-off from JD, which is a massive Chinese e-commerce giant. And we did a bit of research actually into the founders, and we found that the average age of the unicorn co-founder today was 43 years old, which meant that they actually started their unicorn age 34. Now, age 34 means you've got 10 years of work experience under your belt. And that's something that I think was of interest, sort of because it shows that a lot of them actually were, had about half of them had already set up a business beforehand and either sold it, and then half had actually, were working for big companies and then set up a unicorn. So It takes 10 years of work experience before you can set up a unicorn on average. Not everybody's like Mark Zuckerberg. Next slide, please. And I broke down here in this slide for the Asian unicorns. I said that there are more Asian unicorns than any other continent in the world, 267. Within Asia, you know, it was China, it was head and shoulders the biggest last year, followed by India, followed by South Korea, Indonesia, and Japan. Actually, the underperformer, if you like, was Japan. The overperformer from where I sit was South Korea, mainly because population-wise, it's obviously significantly smaller than China and India. But in terms of an entrepreneurship ecosystem, a startup ecosystem, it's been incredibly strong. Next slide, please. And I did some analysis here very briefly on which are the top and most valuable unicorns in South Korea today. And Krafton was #1 with the valuation of 18 billion. This is a work in progress sheet, and I'm just sharing this with you. This is this year's research rather than last year's research. And obviously the likes of Coupon was a unicorn and is now no longer. So Krafton, TOS, We Make Price, Musina, GP Club, we found 9 this year. Last year we had 11, just to give you an idea. And then next slide, please. The top 3 investors into unicorns in South Korea, that's just sort of looking at it, was Sequoia, which actually is the top investor in unicorns around the world, followed by IMM, GAIC. They were the big 3, if you like. And then finally, next couple of slides is tell you a bit about Huron Report. So, you know, I see us as promoting entrepreneurship through our lists and research. And as I said, we hit 8 billion views on the Hurun brand last year, up 50%. And we basically have 3 key IPs. Next slide, please. And we're sort of best known, if you like, for putting out something called the China Rich or the Rich List series, China, India, and the world, and the Most Valuable Companies series, and the Unicorn series. And that's sort of our 3 main products. Next slide, please. And within the Unicorn series, we don't just do the unicorns. This year, we're also doing the gazelles. They're companies that are most likely to go unicorn in the next 2 years. And then also the cheetahs, and they're the most likely to go unicorn in the next 4 years. And then beyond that, we do the under 30s and the under 40s entrepreneurs to watch. And that's part of the whole unicorn series, if you like. And so it gives you sort of an idea as to what we're doing. So we found, if I said we found 600 unicorns this year, as I said, will probably be a lot higher. And then gazelles will be about the same sort of number, companies in the world that are most likely to go unicorn over the next 2 years. And final slide, please. We're very excited what we're going to do in South Korea this year. We've got 3 lists, and the first one is the Hurun South Korea under 40s to watch, and that's going to be the top young entrepreneurs that are worth watching. And it's really a list to encourage the South Korean entrepreneurs to start up. And then we're also, as I said, we're doing the South Korean unicorns. I've sort of just given you the draft list today, and then the South Korean gazelles. And they're the ones that are most likely to go unicorns in the next 2 to 3 years. So my presentation time is up. I'd like to say thank you very much to all of you. And then slight apologies for the slight technological things which meant that you've had to do the PPT rather than myself. But I hope that gives you a little flavor and gives you just an idea as to quite how much innovation and entrepreneurship is currently going on in Asia. And if you're an Asian investor at the moment, this is clearly the best place in the world to be. And thank you very much indeed for your time, ladies and gentlemen. And thank you from here. Thank you.
Hi, Rupert. Thank you so much for your great presentation. Appreciate it. Looking at your presentation, it looks like South Korea already has 11 unicorns on the list. I got to know you via our mutual friend, and you mentioned, actually you made a suggestion that you want to tap into South Korea so that you could promote South Korean unicorns at the same time, under 40 professionals. So what was your thought on that? Why did you choose South Korea as your next destination? Like, I know you do a lot of work with Indian experts and Indian professionals. Can you answer this question, please?
Well, no, thank you. I mean, it's very simple. I mean, you know, if you look at where the world's innovation capitals are, the top ecosystems for entrepreneurship in the world, and South Korea is the top 5 country in the world now. So for us not to go to South Korea is impossible. We have to have a base now in South Korea. So we're strong in the US, in China and India, and in the UK. And then we're also developing into Germany, Israel, and about 10 countries this year. But for us, you know, South Korea is a must go because it's relatively speaking a small you know, population, but for some reason it's creating an enormous amount of unicorns that are worth a lot of money and that the investors are looking to. And actually one of the things that we haven't done the full research on this time, didn't have time today, but certainly something that we could talk about maybe at a later date, is if you look at the South Korean entrepreneurs that are, you know, sort of behind many of the unicorns outside Korea, that would also be a very interesting list to look at, because there's quite a lot of, you know, sort of South Koreans in America and around the rest of the world that are doing some pretty interesting stuff, but that wouldn't necessarily blip onto the horizon in our Korean unicorn list.
Okay, it's a great answer. Thank you so much, Rupert. Appreciate it. Now let me move a mic on Mr. Chang Zhao from BCC Global. Mr. Zhao is a founder of BCC Global, which is a market research agency based out in Shanghai, another professional from Shanghai. Chang has founded BCC Global back in 2008. Wow, it's been more than 13 years right now, Chang. And then it's great to have you over here. So my question to you, Chang, over here is, as a research agency, one of the largest investigative due diligence agency in China and elsewhere in Asia, what is your thought on the current, you know, IPO and Coupang? Remember, Chang and I, we met the Coupang founder, Bum Kim, I think it was a couple of years ago. Back then, Coupang was very small. After pandemic, Coupang got large and it was listed in the New York Stock Exchange. Chang, so could you put some comments on these symptoms about Asian unicorns and then like things going on and etc. At the same time, that if you could let us know about the BCC Global's research methodologies. As you well know, that like last year, Luckin Coffee falsified their revenues and that it was expelled from the Nasdaq. But what we heard is BCC Global was the first research agency found out about the things going on there, Chang. So welcome back to GAIC, Chang.
Okay. Thank you very much, Winston. So I think there's a lot of questions to unpack in when you threw to me. So I'll try to answer the best I can. So I believe the first question is what I thought about the field of Asian unicorns, and I think it's actually it's pretty much on par of what we're expecting at this stage of development of the global economy, right? So if you're looking at GDP parity, I think China have in 2015, I believe, exceeded Japan as the second largest GDP body in the world. If we're looking at purchase power parity, I think it recently exceeded the US. If we're looking at nominal GDP, I think it's still a little bit behind, but we're still expecting it to surpass the US sometime in the future. So I think when you're looking at a larger context of just economic power, I think it's to be expected that China will reach parity sometime in with the US in terms of the amount of innovation and also the amount of unicorns that it can provide to the market. Having said that, I think there are still some notable challenges working in the Chinese field. Not the least is, for example, the risk of fraud, as you mentioned, not just in not just in private equity investment, right? Not just in VC investment, but also it can carry over to the public market as well. Namely, for example, in cases like Luckin and also cases earlier like Sino-Forest, which we also help to investigate. So I think, BCC, a part of what we do is we help to connect investors with reality on the ground, which can often be overlooked by accounting firms, auditing firms, etc., because of the vast market size, because of the vast amount of work involved to actually get to the truth, especially from people who are very much incentivized to hide that truth, right? So we utilize experts on the ground, we utilize on-the-ground investigative teams to look into the actual performance of these companies, both public and private market companies, and as a sort of guarantee or a sort of a confidence measure for investors. I think at this stage of development, because literally what China has gone through in the last 30 years, it took maybe another comparable country about 50 to 70 years to go through. So you're basically packing in both the good and the bad that came about during that period of time. All the frauds, all the public manipulation, all the sentiment manipulation in a period of time. But I think what we're starting to see in China, and I'm glad Rupert brought up the Ant Financial IPO, is that I think the authorities here in China is finally stepping up to the game and starting to put very real measures of control over these IPOs, over these large unicorn companies. So they are not allowed to basically take investor money and then just run wild with it and then just do whatever they please because there's a legal vacuum, right? So, in short, I hope that answers all of your questions. I know there were many, but in summary, I think I'm personally very confident about both the legal and economical landscape of Asian unicorns. And I think me and my firm are ready to assist with the investors who are looking to get to the very real situations on the ground in China, which can often be fairly murky, especially right now from an outside perspective.
Chang, thank you so much for your comments and everything. Speaking of clients of BCC Global, there are quite notable LPs and also global GPs, venture capital, private equities like that. How do you break down these clients and what sort of assessment BCC Global has done? Maybe if you could showcase a little bit of an example, that would be actually wonderful too, right?
Okay, I think there are, without going into specifics, I can divide the financial institution that we work with into roughly several categories. There are very qualified international investors. I think Rupert mentioned a couple that we work with, who are very sophisticated. They're very they cross the stage, right? So they do both very early stage across the very late stage investment in China. And what we do in that case is we help them to do management background checks. We do CDD, right? We do commercial due diligence on some of these companies to make sure that there aren't any red flags, both in their operation or in their management background. There are other less sophisticated investors. Some are, for example, local funds for regional governments who are looking to invest in regional entities. And we do a bit more for them. So we help them formulate more their investment thesis. And also we help them find the best path forward to meet their investment goals. For example, right now, as I'm sure most of the people on this panel will be aware, is that the spec market in the US is becoming a new hot way of IPOing. There are also ways of doing that in other markets, for example, in Korea as well, in China, that are a bit more technically involved. So we help these other funds to find the best path forward, the best experts to help them go forward with these other routes of sourcing capital as well. So, to give an example is that we were looking at some, for one particular international investor, a chain of cosmetics companies. And then we have to track both their online and also offline volume and number of dealerships, et cetera, across the market. And the results came back to be fairly interesting, right? So it turned out that for that particular cosmetics manufacturer, they actually have more offline presence vis-a-vis online. And this is something that is actually hidden in their report to the investor because they want to boast their online e-commerce revenue, because that will actually get them a higher multiple. But we found out that actually their offline portion is a bit larger. It has just been shifted to online, right? This sort of findings can help our investors make a very formulated thesis when they determine the valuation as well as their investment strategy for these companies.
Thank you so much, Chang. And then let me move a mic on Professor Jung-Ho Lee of Hanyang University. Professor Lee is an expert in PEs and a VC sector. He also has had a good experience as a government body professional in the past, right? Professor Lee, what are the trends of private equity deal structure in this COVID-19 era? What's going to be your future direction? Could you also compare the direction of global PEs and domestic PEs, if it's possible, right? So welcome, Professor Lee.
Thank you. It's my great pleasure to join this.
And then move on to your, comments, please. Right.
Okay. Thank you very much for giving me opportunity to join this session. Taking the last question, I think the distinctive difference between global private equity and Korean ones are in the way they invest. I think the first one is the specific characteristics of Korean private equity is they do, they manage a same fund together. They're managing the same fund with a multiple asset manager. Of course, in the offshore private equity market, there are corporations happening. So we call club deal. When they have the big size of deal, and they do that. But in terms of the sharing the risk, this is one of the very special characteristics of Korean private equity fund, managing the same fund with a different asset manager together. According to the Financial Services Commission data, I think the size of the private equity in Korea has grown dramatically. As it stands, 2004, the domestic private equity started with 2 funds. At the end of the 2019, 721 private equity has been listed and registered in Korea. So I think that's the core difference. And also, speaking of the other difference is, in the nature of Korea, I think the economic population is about 27 million people. So a lot of private equity companies making investment in Korea, they are doing financial restructuring of target companies. And then they let them manage the company by the original owner, but they just, restructure financially. But they don't directly get involved in the management of the company. Seldom they do that as a board director, the board members, or bring the sales or revenues. However, in the global private equity arena, this is very common. A lot of private equity companies, they do step in as a board member, and they help the companies to upgrade revenue and sales. So directly they involve themselves in the management and share the fruits together. So that's the one thing. And third one is most of the Korean private equity funds investing offshore, they seldom do that by themselves. They invest the fund, the fund of the fund style. So they choose global private equity funds doing very good job in this specific arena, and they choose the fund and they join the fund as a fund of fund. But I think it's it takes time for Korean private equity to have the capacity to deal with direct deals and the direct investment in offshore market. But that's something that Korean private equity has to improve the capacity. Well, speaking of the COVID-19, I think private equity companies mainly were focused on, before COVID-19, real estate. Yes. However, I think there will be a greater impact from potential interest rate rise. So I think the private real estate part is one of the area that we have to pay attention. However, there are dramatically increasing amount in AI, alternative investment. Through alternative investment, year 2000, the size of the alternative investment was globally $1 trillion. Now, including hedge fund, it's about $10 trillion. And I expect that by 2023, will increase to $13 trillion based on McKinsey report, as I quote. So I think, for private equity fund, I think they have to be one of the active role in alternative investment with specific highlights for startup companies and unicorns, because most private equity funds, it's been a long term. Yes, 8 years, mostly with extension, 10 years. But the world is changing so fast. So the quality of time, 1 year, is different from that of 5 years ago. So the world is changing so rapidly, and in the nature of the private equity, waiting 8 years is too long. With that, as my previous speakers has quoted, I think we have to focus more on the companies growing fast in the fourth industrial revolution, or in the blockchain or AI, which is rising star in the unicorn sector, rather than focusing on too much conventional investment. I think there are, of course, a proper balance needs to be done, but this is my idea. Thank you very much.
For your great comments. I have one question, Professor Lee here. In March, the Korean National Assembly abolished the 10% rule. Until now, the management participating in private equity funds had to acquire more than 10% shares in companies, and which is required to hold a 10% stake. With the abolition of this law, private equity will also be able to invest in minority shares and there. Maybe you heard about this, Professor Lee. What's gonna be the future of these private equities? As you can see on the Rupert slide, IMM was one of the investors of all these big giant unicorns of South Korea. And what are your thoughts on the future of private equities in South Korea then?
Well, I think the private equity arena, I think that we have still a long way to go in terms of regulation. There are still some regulation hurdles compared to global marketplaces. But with the advancement and the achievement and improvement, may I call, in the Korean National Assembly for private equity, that allows more small money investors can join private equity funds. It has been occupied mainly by big giants, big funds. But I think that Korean government is trying to open the gates to more small money investors to join private equity. But based on the qualification of the asset manager, there will be stricter, tighter control of the qualification of the private equity, because private equity in Korea was not approval process, was a registration process. But I think the qualification check and the screening process will be tightened. On the other hand, opening the gate for more people to join private equity.
Okay, perfectly. Thank you so much for your comments. Appreciate it. Now we'll move on mic to Mr. Dong-Hwan Kim from Ha나벤처스. So, Mr. Kim, what are the trends of overseas investor domestic companies in the growth series E stage here? For example, as you can see, there was Coupang's IPO, and also there's a famous M&A of Uwa Brothers not too long ago. There's a huge transition going on in South Korea then. So what is your thought on the roles of a Korean VC venture capital? And you previously mentioned that there are a lot of regulations going on right now. It's very difficult to invest in unicorns like Coupang right now. But maybe there's got to be a way to propel prosperity of the South Korean venture capital. So Mr. Kim, could you introduce yourself and your organization, Ha나벤처스, and a little bit, and then move on your answer, please. Thank you.
Thank you for your introduction. My name is Dong-hwan Kim from the Ha나벤처스. I am a CEO and a CIO of the Ha나벤처스. As you told, after Coupang and the Ua brothers are known to the overseas investor after they are merged or they go IPO in the US market, recently more and more the overseas investors are showing their interest in the local market. We are talking about the Korean and Asian unicorns. You know that there are the top five the unicorn countries. This is the Korea. But even though there are meaningful size of a startup ecosystem in Korea, relatively the Korean market is least known to the overseas market and investor. Activity of the overseas VCs, frankly, is very inactive in Korea compared to the global PE activity in the Korean local market. Let me say the $500 million the size unicorn candidate. There are many the unicorn candidate in the Korean market around the $500 million USD market size. There are many e-commerce and content and media startups ready to be the well-known unicorn in the Korean market. In this market, I think that there could be the very highly competitive competition with among the Korean VCs and the local PE and the overseas the VCs who focused on the Asian, the growth stage, the VC market.
Okay, Mr. Kim, thank you so much. Speaking of your career in the past, and then I looked at their profile, Mr. Kim. I know you've worked for SoftBank in the past. Is that right?
Yes.
So what are the distinction between a large GP investor like SoftBank at the same time that what's gonna be the next stage for Korean venture capitalists? We hope that we can also see successful venture capital like SoftBank in the future, right? Could you actually tell us a little bit of about your experience as an investor of SoftBank, and what are the things that are required for South Korean companies, venture capitals or private equities to become a global player then, right?
I think the Korean VC industry heavily developed from around 2000. It's been just 20 years history business, I think, in Korea. In early stage, there were no overseas investor, but from around 10 years ago, the SoftBank and the Tencent, they are originally not a VC. They are the industry, the IT-focused investor. They deployed the money into the Korean market, and many of their portfolio became well-known unicorns in Korea. But nowadays, it's not that active so much, but I see we can see the inflow of the overseas, the VC money and the PE money into the Korean, the unicorn candidate market. So going forward, I think we could see the competition between, as I said earlier, the Korean money and the overseas industry money and the overseas VC money. Yeah, that's, I think, we could see the market competition going forward.
Okay, Mr. Kim, thank you so much for your comments. Now we're going to move on mic to Mr. Dong-hwan Chang. He's a CIO of a Public Officer Benefit Association. So, Mr. Zhang, first of all, congratulations on last awards last year, and then POVA was selected one of the best investors in Asia. I mean, we appreciate your hard effort and then all that. So my first question is, there are a lot of things going on at the moment right now. It's very difficult, as you said. Nowadays a lot of pensions and public official fund do not have the investment opportunity, the VCs and all that. But looking at these trends, like Coupang's IPO, and then everyone's attentions on South Korea, and then what do you think about this? Are there any specific GPs that you see particularly promising in the future? If you cannot answer these questions, that what are your collaborations with global GPs? I mean, can you explain, or what kind of industry do you see as a promising in the future as well?
Yeah, thank you for having me here. Okay, my name is Donghwan Chang. My name is called DH. I noticed that one time that DH abbreviation is used for delivery hero. They called it DH, one of the Korean unicorns in Korean market. Anyway, I mean, there is a very sharp contradiction just discrepancy in the market between Korean institutional investor sentiment on that VC area, and also between that, the very strong market movement in the global VC industry. What I can tell you is that definitely, as the market goes into that lower growth area, especially after the global, COVID situation, there is a very strong incentive to establish promising VC startup globally. There is no exception in the Korean market. However, institutional investors are still quite conservative to look at the VC area. I think that there are lots of reasons. However, I think one of the big reasons is that they have very bad memory in year 2000, or when the tech bubble globally erupted. I think that is one of the reasons. And the other one is that I think when we invest in the alternative investment area in among our Korean institutional investors, we need to go through investment committee. So when we go through investment committee, they are so cautious, they are so conservative. They would like to look at the exact financial data based upon there is very strong proven financial data. However, when we invest and when we review that startup companies, there is not much that financial data to prove their promising future. So that's the kind of things that we institutional investors need to tackle in the future. However, what I think is that I think as one of the Korean institutional investors, I think there is a very strong incentive or motivation is coming inside from that Korean institutional investor, because if we look at the whole market, listed companies have started to decrease globally, especially in the US market. However, private company, private companies have the number of private companies have started to continue to grow. So as I mentioned, as we go through that very low growth market, growth comes from the private market. So we need to look at the private market, such as VC areas. So there is very strong motivation in that Korean institutional investors. So as Mr. Kim mentioned, that to be honest, Korean institutional investors are not that active in that VC investment. However, what I can say is that there is a very the rapid changes in the inside. So these days, POBA, we have started to look into some late stage VC investment opportunity. as of now, we have been re-up and continue to invest in Korean local VC companies. However, I think that is based upon the very strong proven track record. However, we do not have any offshore VC position at all. So I think down the road, we may start to consider as initial stages to consider late stage VC investment cases further, and maybe in type of I think fund of fund type would be kind of appropriate type we can consider in the future. So anyway, I think that what I can tell you is that in the future, there is a very strong motivation to think about growth, how we can manage, growth market other than the listed market. That is the big question that Korean institutional investors need to tackle on. Thank you.
Okay, Mr. Zhang, thank you so much. I have one question here, Mr. Zhang. What are the changes of your investment strategy before COVID-19 and after COVID-19? Are there any distinctive investment strategies that you implemented in the past, Mr. Zhang? So a lot of people, I say that a lot of LP investors saying that it's quite difficult to do due diligence outside of Korea right now. So there's a tendency to stick into existing GP investments in the past, especially past year. So what is your thought on that? Or what's going to be changes on your investment strategy, Mr. Zhang?
Well, basically, I don't think there will be not big changes in our GP selection process or method, because I think we have continued to business relationship with a lot of global GPs in specific asset classes. So I don't expect that much changes. However, I think, as I said, internally, we have been using re-up cases or some blind fund GP selection process or everything. However, I think down the road, I think maybe even though we cannot continue to on-site due diligence, I think we can select external GP based upon their proven track record and their reputation in the market. Yeah.
Okay, thank you, Mr. Zhang. That any other question to the CIO Zhang from our panelists sectors? From our Shanghai, Chang, any questions to Mr. Zhang or Rupert?
I mean, my big question, and I think it was very interesting to hear how the dynamics seem to be changing in Korea, but are we going to start seeing sort of international funds from Korea really sort of targeting these earlier stage in outside of Korea, earlier stage investments? So if you get to unicorn stage, then it's already pretty expensive. But where we've seen soft banks being so successful is in the in the early stage. And so I'd be very interested to know if the funds, I mean, I know you touched upon it briefly, were thinking of raising monies to actually invest into some of these Asian unicorns. As I understand, it's very difficult to do due diligence, of course, but there's a lot of experts out there. So I don't know. That's one thing that I've always been interested in.
Okay, Mr. Zhang, maybe.
Well, yeah, I'm not working BC as a GP. However, I think as of now, as you're already aware, that the Korean GPs are very much focused on Korean local market. However, these days I have started to look into many of capable, really, the competitive GPs have started to look into offshore market, especially in that Asian market. I know that lots of have started to look into China market and the Southeast Asian market. Some I know that some have started to look into that the Middle East area. So yeah, it will take them time, but they have started to look into and the research on that market. They would like to have a relationship with that competitive GP in the local area.
Yeah.
Okay, is that the right answer for you, Rupert? Then.
Yeah, no, it is. I mean, it just strikes me, since a place like Korea is so much in the heart of all these, of all this entrepreneurship, and is leading in many ways, that actually, sort of looking beyond the borders seems to be a very good money-making opportunity. As I think you suggested earlier on, about maybe as a fund of funds is a first easy step, and then to sort of go more in depth later on as one builds expertise. But anyway, no, thank you. It's a trend, I think.
Okay, yeah. All right, Rupert, thank you so much. And then if you do not have any questions, we're gonna move on to mic to Mr. Kyu-Hong Lee. Mr. Kyu-Hong Lee is the CIO of a teacher's pension. So, and thank you so much for being a part of this conference, Mr. Lee. My question is, what are the strategy allocations, and then what are your portfolios at the moment of the teachers pension fund? And then what's your best allocation strategy at the same time that I know you've been raising blind funds so much for a long time. And then could you explain your strategy of a teacher's pension? Looking at your past successful record. And then can you introduce yourself a little bit, Mr. Lee, and then move on to my question, please. Answer, please. Yeah.
Thank you, Mr. Kim. My name is Kyu-Hong Lee. I'm the CIO of Teachers Pension Korea. It's a great honor to join this discussion today. To help you understand how we make investment decisions and where we are in terms of PE and VC investment, let me briefly talk about or introduce Teachers Pension first. Teachers Pension Korea is the second largest pension fund, public pension fund in Korea, with asset size of slightly over $21 billion US. As a public pension fund, we pursue long-term investment returns, hopefully stable and solid investment returns in the long term. Therefore, we carry out our long-term strategic asset allocation plan in a relatively strict manner. So we seldom do short-term market timing decisions. That's the basic principle of our investment decisions. We have now about a third in fixed income, a third of assets in fixed income, and slightly over 40% in equities, and the remainder of assets in illiquid alternatives assets, including PE and VC. According to our strategic asset allocation plan, the allocation moving trend is we reduce further fixed income side and increase further in alternative asset size. If I give you a little more detailed information about alternative side, we have a third of alternative assets in private equity, and a third in real estate, and another a third in infrastructure. And if I narrow down further into private equity side, private equity class, which includes private debt and ventures one, we have about 70% in PE and about 30% in private debt and venture. Normally, we make PE and VC investment through blind funds of GPs with solid track record in the past. In terms of VC investment, we are at the early stage, and we are expanding the VC investment gradually. But however, we have not yet invested in offshore VCs yet. Hopefully, in the coming years, we might study the possibility of investing in offshore VCs going forward. That's a brief
Yes, Mr. Lee, thank you so much for your comments and everything. My same question to you, Mr. Lee, and then Are there any, Professor Lee actually Dr. Lee talked about the promising industry, AI, at the same time, the blockchain, like, you know, what are your thoughts on the promising industry in the future? Like, you know, what sectors of industries now teachers' pensions are looking at? Maybe not really specifically, if you just tell us a little bit more about the ballpark investment areas of a teacher's pension in the past, it could be in the future too. Mr. Lee?
For PE or VC investment?
Yeah, it doesn't matter PEs or VC sector that, you know, especially.
As I mentioned, we invest in, you know, we normally invest in PE and VC through blind pool funds because we don't have much internal resources for the due diligence internally. So we prefer the blind funds of GPs who have very solid track record. But looking back, the solid track record, the GPs who have solid track records, they, you know, primarily invest in the fourth industrial revolution sectors and also bios, healthcares, etc. Those are the main the sectors that the global GPs have in their portfolios.
Okay. Any other question to Mr. Lee then, you know, from our panelist session? Not really. Yeah. So then I'm going to ask a question to Professor Lee, Zhao. Mr. Lee, you know, I mean, as I can see that, you know, I think I met you probably more than 10 years ago when you were with the FSS, you know, a long time ago. And I couldn't really recognize you because your face did not really change, you know, 10 years ago. It's good to have you over here. As you can see, the private equity investors' standpoint, and, you know, what do you think about the current regulations? Do you have any other suggestions to increase investments from overseas? Maybe, you know, there's a good case now. The South Korea, just like Rupert mentioned, there are 11 unicorns at the moment right now, and it's quite huge. It's a world ranking number 5 here. It's quite impressive. But as I can see, like everybody sees that there's a lot of opportunities, and what's going to be next coupon? I mean, if you look at the private equity investors, like, you know, I mean, standpoint of view that there's not too much distinction between PEs and VC these days because the size of the unicorn is getting bigger, you know. Now the VCs are investing more than a few $100 million, you know, et cetera, like this. Do you have any suggestions to facilitate this sort of the investment in Korea to Korean unicorns? Maybe you can talk about the like a South Korean GP standpoint too, and also you know, I mean, global GP standpoint too. Then you're probably on mute right now, Professor Lee. Then
thank you very much for your excellent question. I'd like to touch upon from 2 aspects. Number 1, investment capacity aspects, and also risk management aspect. Number 1, investment capacity aspects. You know, as you can see, most of the big investment, like as Coupang by SoftBank, and other big major UA Brothers and Delivery Hero are all done in big amount by global investors rather than domestic investors. It does not necessarily mean that we don't have money. I think it's because of the investment capacity to look into the deal details, how to structure the deal, how to value increase the deal. And at this moment, please don't take it as the criticism. It is nature course gross pain, I think. I think the most of the most of companies have gone through these phases. First, they taste the food as equilibrium. So select good food, go to the restaurant. And then you choose good restaurant, make an investment in good restaurant. That's good. But at some point, you have to be a cook to make a big money. But I think we are in the transition period in Korea. For just suggestion, I think we Korean investors have to align with the global investors who have an interest in Korea to make a and joint investment in Korea, because we know this market better than anyone actually. So I think in terms of progressive idea to structure the investment to increase the investment capacity is critical. In terms of regulation, and I was former Director General of Financial Services Commission. So far as I know, as a member of Capital Markets Committee, we don't, Korean government do not differentiate and give between Korean local investor and global investor. Korea is the only open market in terms of foreign exchange, in terms of all regulation to foreigners. So I think there's no differentiation. However, I think in terms of way how to make an investment, we have to find a way to increase internal capacity to make an investment rather than self-learning. But I think sharing the real case with global investors is very critically important to know how they make an investment, and we provide our synergies, our core strengths. So later on, I think we can be independent. So in terms of risk management, I think this is a common question to Poba, my good friend, and then teacher's friend. Well, investment committee looks at a very, very conservative way. Of course, they cross-track and they make sure our investment is almost secure investment, even it's like investment itself take the risk. But unless otherwise there is full security of our investment, the investment committee are reluctant to approve the deal. But in the nature of the VC or private equity, we naturally have to take a risk. So I think we have to develop how to measure the risk of the private equity and VCs in this arena. As our great CEOs, CIOs today have mentioned, it is critical to increase the proportion of growing sector investment rather than fixed income side. So I think this is critical. So I think we are at cross junction, Korean pension funds and Korean investors, but we have market, and Korea is the most dynamic market. So I think we can find a way how we can coordinate with the global investors rather than just giving the money as equilibrium, but we have to take a step to be a coup in this world. Thank you.
Okay, yeah, it sounds wonderful, Mr. Professor Lee. Thank you so much for your comments, and then etc. Let me actually ask this question to Mr. Dong-Hwan Kim, of CEO of Hanaben처스. Mr. Kim, as you mentioned that there's a lot of things going on there. Like there's the things that you actually mentioned that in the past as an investor, there's a lot of regulation going on there, to see a lot of global players, global venture capitals in South Korea. What are the requirements of companies like you, Hanaben처스, and what are the things need to be done, to make more like global venture capitals? Yeah.
One of the big issues, including the Hanaben처스, is that we have the limited size of the AUM. So more than half of the funding for the local VC is made from the government-sponsored money. So residual half from the pure private market. But in the private sector, so their duration requirement is very short. They require mostly less than 2 years duration. So as all of you know, in venture investment, we need to have the long-term long-term investor. So in that sense, we need to have the long duration patience, the private money, to increase the total AUM of the whole Korean VC market. So as we told earlier, so for the many Korean unicorns, the major investors has been the overseas investor. As we see in the coupon cases. But going forward in the local market, we hope to source more unicorn companies by the local VC. So I think to increase the overall AUM size of the local VC, and to source the local unicorn candidate, the Korean VCs need to have more private money from the market, in local and from the global. Yeah, that's my answer.
Okay, thank you so much, Mr. Lee. Now let me ask a question to the CEO of BCC Global, Mr. Chang Zhao. Chang, as you know, as a founder of BCC Global was invested by the world's very famous GPs like Founders Fund, which was actually one of these Twitter investors in the past and everything. And also BCC Global, as far as I know, I think the majority of US GPs investing in China are our BCC Global's clients. What are your thoughts on these venture capital companies? I mean, maybe you could just showcase your experience who made an investment successfully in these Asian unicorns, Chinese unicorns, venture capitals. What are the like the, maybe we can say that, you know, now South Korean venture capitals, also unicorns, could exemplify the, you know, success case of China in the past like this. There must be like, you know, certain strategies of these global VCs investing in China. And then maybe you could showcase a little bit of your example, like, you know, your history is really appreciated, Chang.
Okay, I will attempt to, I think I categorize the VCs and PEs that we work with into several categories. I think there are some, for example, like Sequoia and also Northern Light, which is the VC who invested in our company, who are very much trying to get in step with how the country and how the economic fronts are developing, and then going to the more innovative, the deeper portions, right? And build relationship with existing giants in China, for example, with Alibaba, with ByteDance, with Tencent, to look into opportunities that may be co-developed in the tech, consumer, healthcare, etc. space. But in the past, for the last, let's say, 10 to 20 years, as China gradually opened up since the 2000s, you can focus on pretty much anything that's consumer related, and you know, as long as you have the economy of scale, that will be a win, right? So, you know, for example, I mean, you can invest in the consumer space, and you know, like just buy McDonald's, right? Buy McDonald's in China, and that would be a great investment. I think, you know, Hongyi famously, they bought Pizza Marzano to China, which was one of their better investments. So, however, of course, as China more fully engaged with the Western world, and that population, you know, the scale, the economy scale bonus kind of evaporated in the recent days, and it becomes more what we consider a more fair, competitive market, both for these so-called unicorn startups as well as for VCs. I think right now we're entering a phase where, you know, you can't just do the obvious, you know, consumer / population-based thing. You actually have to get in deeper with the technology, with the market, and to you know, be more in tune with where the country is going, where the economy is going, in order to make better investments, right? And I think there's a market evolution in the last 5 to 6 years, where you see there is a departure of where the Chinese unicorns are heading, vis-a-vis before. I mean, they're almost direct copies of US unicorns. Now they're becoming more and more striking out on their own, a little bit more different in terms of both business model, in terms of technology, in terms of the market they're reaching. And I think that's a good thing, right? For both the unicorns as well as the VCs and the PEs that invest in them.
All right, Chang, thank you so much, Sanan. Any other question to our CIO? So I'm gonna take a last question, or our gentleman based out in Shanghai. So by the way, Chang,
I have one question to Chang, if you don't mind. You know, what I know there are a lot of you know, unicorns in China, but from your perspective, what are the commonalities or common strengths they share together because even though the industry can diverse, but there should be something to become unicorns. So common conditions you found.
I think that's a great question, Dr. Lee. And I think there are three phases, right, of Chinese unicorns basically coming into their own. The first phase of unicorns, for example, Alibaba, and let's say Sina, right, NetEase, they are almost direct copies of US-based companies that copy from US, right? That was the literal strategy, right? And Financial was a copy of PayPal, NetEase and Sina was a copy of Yahoo, etc. So at this phase, I think there was very little innovation going around, right? But then we reached the second phase, and you see companies like, for example, Tencent, that's emerging. Obviously, Tencent started a lot earlier, but what we see is that Tencent as a messaging app, its transition really started when it grabbed the mobile market, or when WeChat started, right? And it started integrating it into the entertainment platform. At this stage, I think it's starting to move away from the Western market, and what it really embraced is the population base, right? So at this stage, I think any company that can deeply engage with the 1+ billion people in China, especially through the mobile infrastructure rollout, that became the go-to, right? That became the new unicorns. I think ByteDance, as its previous incarnation as a 今日头条, right, as a news app, news aggregation app, certainly fits that model, although TikTok later broke away from that, right? So the third phase of the unicorn development, I think, exemplified by TikTok and also Pinduoduo, which it really is not based on anything at all, right? And then you look at the biking, the bike sharing apps in China, where it's not even looking at the entire Chinese population as a base for its application, but more segmented, a more focused approach, and then say, okay, we're here to solve that problem, right? So Pinduoduo, PDD is certainly that company. It's not really looking into the first tier markets, but more second and third tier consumers, who are left out by the e-commerce push, right? TikTok is focusing on young people who have a lot of spare time, right, at their start time, and so is Bilibili, who is looking at a special subset of that set of young people who are into anime and pop culture. Obviously, I'm generalizing quite a bit here, right? And I think the next phase of the Chinese unicorns is going to be a little bit interesting because the overall political atmosphere is shifting a bit, and the new topics, they take on actually a more interesting persona, since in the background there is a bifurcation of technology, of society, of literally communication between potentially China and the Western world, or at least with the US, right? And in this field, what can emerge? I think that would be much more interesting.
Okay, thank you, Chang. Sorry to cut you off. Now we're running out of time, and appreciate beautiful comments here. So let us wrap up the show right now. So thank you so much for joining 2020 Global Alternative Investment Conference. The main conference is going to be on actually September 8th this year. So after COVID-19, I think traveling restriction is pretty bad right now. But Chang and Rupert, hopefully you can fly to Korea in September. To be part of it. Okay.
Love to.
All right, gentlemen, thank you so much. Appreciate it. We're all going to see you next time then. Thank you so much. Bye-bye.
Okay, thank you.
Thank you.
Bye-bye.
Bye-bye.